You carefully analyzed the charts, calculated the perfect entry point, all the factors aligned, and suddenly the market moves in the opposite direction. Familiar? Why does this happen? Because most traders fail to do proper news analysis before starting to trade. Today we'll break down which specific news events carry the biggest risks for your deposit, how they affect the market, and what to keep in mind to avoid unpleasant surprises. We recommend watching till the end. It will save you nerves and your deposit. Decisions by central banks and regulator comments. The outcomes of meetings by the Fed, ECB, Bank of England, and other key institutions set the overall tone for the market. It's not just the announced rate that matters, but also how much it differs from the forecasts. If a dovish stance was expected but the rhetoric turns hawkish, currency rates can shift by several percent in minutes. Spreads widen and trades even often execute at less favorable prices. Key inflation indicators, CPI and PCE, these figures show price dynamics and help predict regulators' next moves. Unexpectedly high inflation leads to rising bond yields, falling stock prices, and changes in currency flows. The higher the actual values compared to expectations, the more likely monetary policy tightening becomes. Employment reports, especially non-farm payrolls, the NFP. This release is one of the most volatile in the calendar. Even small positions can lead to major losses due to sharp movements and widened spreads. The market often reacts impulsively and then reverses. Stop orders in these moments can trigger large slippage. Political and geopolitical events, major conflicts, sanctions, and trade rule changes immediately impact liquidity and market sentiment. Sometimes brokers are forced to temporarily restrict trade execution. Prices of key assets, including energy, metals, and currencies, can swing sharply. In some cases, the market might close at the worst possible moment for a trader. And by the way, subscribe to the official Pocket Broker YouTube channel to get the latest trading strategies, educational materials, and professional analysis on time. Watch, learn, and apply to start trading more effectively. The subscription link and promo code for a profitable start are under the video. News related to the banking sector. Reports about issues at major financial institutions, rating downgrades, or sudden audits can undermine confidence in the system. Such events often trigger mass exits from risk assets and large-scale sell-offs. Now, if a trader holds high-risk positions during that time, the consequences can be severe. Corporate reports and releases. Quarterly results can cause strong price movements in individual stocks. Gaps at market open pose particular risks. If news is released outside trading hours, the next session may open significantly higher or lower. How to act in such conditions? Regularly check the economic calendar and track releases that could cause sharp market moves. Reduce your position size or avoid trading before major news events. Keep enough free funds to cover temporary drawdowns, and define in advance your loss limit at which you'll stop trading without emotional decisions in critical movements. Subscribe to the official Pocket Broker YouTube channel to get up-to-date trading strategies, educational materials, and professional analytics. Watch, learn, apply, and start trading more effectively. The subscription link and promo code for a profitable start are under this video.